welcome to today's market update. For those joining us for the first time, make sure to hit that subscribe button and don't forget to ring that bell to stay ahead of the curve with the latest market trend. Well, yesterday we were in this region looking at, the mark up as to what happened in the market. We're still in that 4-hour uptrend. We're broken out of that range and we're getting some, sort of consolidation in this region. Now, I want to talk you through just a few things. There's not much to actually deliver today because markets kind of just been a bit stagnant in this consolidation range. But just to give you an idea of what we may be looking at as far as potential scalps may be, potential setups, especially for that lower time frame plays. Okay, so first things first, what we can see is that we're still in that 4-hour uptrend. When we go to the 15-minute to get a closer look as to what's happening, we know that we've tagged that 12-hour demand zone as well as the value area high. That's the region we're currently at. Okay, and as we've tagged that zone, we've got a reaction to the downside. We've formed a range and we've got further reaction to the downside. And this down candle has actually reacted from that previous range high. So this range has almost acted as a support, as we can see, a support for the reaction we had today at 12:30. So post that, we then marked up and we've been accepted straight back into that range, and we're currently trading at that range to see what may happen next. I'm going to get rid of this for now. In terms of our local trade, well, what do we need to do? When we're trading in a range, first thing you need to do is mark the range high. As soon as you've marked that range high, the next thing you may want to do is actually decide, well, what is the top of your range and what is the bottom of your range? Well, at the top of our range, we've got it coming at around 47,286. And the last bottom that we've put is coming around 45,532. So what am I looking out for at the minute? Well, what I'm looking out for is if this is indeed our range high and this is indeed our range low, well, we're looking to get some sort of reaction, at the highs of this range for a potential markdown. A reaction at the high for a potential markdown. And what will this look like? Well, price could do something like this. It could play around here for a little, go a bit higher, go a bit further up, and then wick up and mark down. If that is the case, well, we're looking to enter a nice short at this level. As far as our stop loss, we want our stop loss to be above that high, and we're looking to drive that down at least, until this previous range high. Why is that the target, and what is the reason as to why that may be the case? Well, if you look at the price action, at the minute, if you look at the nature of these bars, then the price bars, we can see that we're building quite a nice, nice trend line. And if that continues, that will be really good for us as far as, our bearish markdown may be, because we have this nice liquidity line over here, and we've got all of this inefficient price action. We've got all of this inefficient price action that needs to be filled. So that's another reason as to why we may dip down. So we've got our liquidity grabs as well as the inefficient price action, and that will give us a nice target at the previous range low. Okay, so why is that the target, that previous range low? What you may want to pay attention to is that if you look on the 2-hour, we can see that we have a 2-hour order block here, or 2-hour demand. Okay, and I say demand because it was a supply zone that's been transitioned into a demand zone. Okay, this is what's known as a breaker block. Now we've got that holding price up, and below that we've also got another demand zone, which is confluent with a value area high and a point of control and a 2-hour order block and an 18-hour order block. So that's quite a lot of confluence there. So we're looking for a trade there, as we said yesterday. We're looking for a bounce here, as we said yesterday. That's if price is to come down, and this would be the reaction, for a downturn, for more high, more upward price action. But in the case that we're looking to come down, we may wick this top first before we come down. then as a result, we're looking to enter a trade at around this region. So what am I looking out for on my chart? I'm looking at my lower time frame market structure. As I approach this high, I'm looking to see whether there will be a clear bearish divergence at that region or a clear change in market structure. Those are my key confirmations as to whether I'm going to enter that trade or not. In the case we do none of those, so in the case we don't mark down, in the case that we don't react off this high, in the case we actually break upwards, well, what I may be looking out for in that instance is a reaction into demand. And what do I mean by that? Well, that will be a range retracement setup, whereby we break out or retrace backwards. Now, this retracement may not be as deep as this. Okay, it may just be a nice, retracement at the top and further upwards action. So we need to be cautious and we need to be looking for our market structure as we approach that range and look for a clear change in market structure to enter that long. So that will be our long option in the case that we are to continue this bullish trend. Now, some of you may be thinking, why would we continue further up? Well, there's reason to go further up. And what is that reason? Well, don't forget, as we spoke about yesterday, we've got all that, all those, supply zones up there. We've got all those institutional levels up here. We've got our, Fibonacci zone, and we're also looking at this zone as a potential area of interest as far as our previous range. So we've got these liquidity grabs up here, we've got some liquidity grabs up here, and we've got some supply zones up here that may be of interest. So those are reasons as to why we may continue further up. All right, now in the case that we do go further up, we can already see that on a 12-minute market cipher has actually printed quite a bullish sign. And what is that sign? Well, that sign is a hidden bullish divergence. What we can see is we have our range, of course. I'm going to get rid of this so we can see clearly what's going on. So if we get rid of that, if we get rid of this as well, if we get rid of this as well, and this over here, what we can see as far as price action, internal price action, is that if we take our trend line starting from here, we've got these highs, these lows, and we've got all this internal range, and then we have some more internal price action, and then we have all these wicks. So if we analyze these wicks further, we've got some bull rejection wicks at the top, and then we've got some bear rejection wicks at the bottom, which suggests that there is a lot of buying action here to push the price all the way back up. Someone doesn't want the price at these levels, and they've pushed the price all the way back up. And what have we seen as far as market cipher? As far as market cipher goes, we've seen that we're printing, lower lows. And on market cipher, we can see that we're printing over here. Or if we take this further up, we can see it clearly. We're printing higher highs as far as momentum goes. We can also see that the money flow is curving up. We've got a positive gradient. All right. So this is quite a bullish sign, and this may be an indication that actually we are about to get a continuation and a continuation up. If this was to play out, the chances that we break through, this range is actually quite high and is more probable. But it's really important that as we approach this range, we look out for that change in market structure. So on a local level, that's what we're looking at as far as our trade setups. All right, we're in a very interesting time as far as Bitcoin goes. We've obviously got news coming out as far as the ETF and people being able to have access to Bitcoin that didn't originally have access. So this is quite an exciting time for Bitcoin. And yeah, I guess in the next following days and in the next following weeks and months, we will see how the price action progresses. Well, that's it for today. If you've liked this video, if you found it useful, educational, don't forget to hit that subscribe button and hit the bell icon for more recent updates.